about to learn, you can't add the spirit in the retentive memory, so that day we can be able to reproduce and pass our exam. In Jesus' name, I will pray. Thank you. Amen. Amen. Today we are going to learn a very simple thing. It's a simple task, but you can see that most of your questions are interested in that aspect of IAS 4. And so once we finish and we pick one or two questions, you get to know, okay, so these people, they like the thing like, okay. So this all happened. I will want to finish this. We solve some one or two questions. And then we'll be left with some questions. So that one, even though we are starting official class on Monday, I will see how best, even if we don't meet it, okay? Even if we don't meet it, I'll see how best we can meet our John and then clear those questions. Usually, I would want us to solve plenty questions with different scenarios. Usually, helps those who are joining the risk test class. I think you have to solve more of these, all these questions are in risk test. All right, so let's see. We are still on IAS 4. We come to this. Now, let's look at it. We are looking at deferred tax. We've looked at the meaning of deferred tax, how to even understand why deferred tax, computation. We've looked at all those things. This morning, I want to look at deferred tax and revaluation. And I'm going to make it very simple, at the simplest. I'll try and treat this as if you don't know anything about this. So you just pay attention. Now, what the standard is saying is very simple. He's saying that you see that IAS 16 permits an entity to choose between either the cost model or the revaluation model as a matter of policy. Is that not it? So the entity chooses the revaluation model. You see that the revaluation just means reflecting the value of an asset in its market value. So when you do revaluation, the current amount of the asset will either increase or it will reduce. And it will have effect on deferred tax. Because deferred tax is looking at the difference between the tax base of the asset and the current amount. Is that not? So if something has adjusted the current amount, then it will have effect on deferred tax. So we are always interested in sound. All what the standard is saying is simple. That yes, when you do revaluation, if you change the kind amount of that, for that matter, deferred tax will be affected. So it's just telling you where to treat the deferred tax caused by all revaluation. In other words, you have to know the treatment of revaluation as well. So I'll come to that. For now, this is what the standard says. IAS 12 requires that let me do some small report. How do you call the name? Jerry, are you there? Jerry, what? Jerry asthma from Campus. Are you here? Jerry is sleeping. Therefore, requires that fair tax caused by revaluation is treated at the same place, at the same place the revaluation difference is treated in the income statement. It's treated at the same place the revaluation, at the same place the revaluation is treated at the same place the revaluation difference is treated in income statement. The income statement is made up of two elements. The income statement is made up of two elements, the profit or loss account and the other comprehensive income. The other comprehensive income is not part of the double entry. It's only an adjustment to the income statement. And the items in other comprehensive income will be seen under equity, with the exception of some few items like exchange difference on translation of financial statement, where the closing rate is being used, like the cash flow hedge, the fair value gain or loss, and cash flow hedge, and those ones. But apart from these ones, um, whenever you see an item under other company, you see them and depending on okay. For now, we are talking of revaluation difference. So that's if the revaluation difference is shown under other comprehensive income, and deferred tax caused by revaluation would also be shown under OCI. Now the big question. We have been talking of revaluation difference and then deferred tax. And the underline where the deferred tax caused by revaluation. Deferred tax caused by revaluation. How do you then ascertain the deferred tax caused by revaluation? Because that's what we are going to treat. It's very important that we look for that. Deferred tax caused by revaluation. It's very simple. It is just the revaluation difference and the current tax rate. That tells you how much deferred tax is caused by what? The revaluation. So it is just a revaluation difference times current tax rate. The revaluation difference can be a gain or a loss. So let me assume that you people don't know revaluation difference, okay? And then explain how to get revaluation difference. Then the next thing is that I need to explain how revaluation difference is treated, because in the same way and manner revaluation difference is treated, you also treat what? The deferred tax. It's very important. So that's if the revaluation difference is shown on the OCI, the deferred tax caused by revaluation will be shown on the OCI. It should be taken to equity as well, because the revaluation difference will go, and then to go to equity. Okay, now let's look at something. So I'm picking revaluation difference as if you don't know anything about it before, because if you don't understand how to compute revaluation difference and how to treat revaluation difference, there's no way you can understand how to treat the deferred tax or revaluation difference. It's very important that you go through that. Don't assume you don't and just go through. Yes, Hannah, it's awesome.
Yes, sir, please. So, as you are saying, that if there is a revaluation difference shown under the comprehensive, at the same time, can the company decide or have it policy that all revaluation should also be shown in the profit and loss account?
No, revaluation,
Okay,
choosing between revaluation and cost model is a matter of policy. But once you choose
okay.
revaluation, the treatment will be in accordance with IAS system. If you choose revaluation,
Uh,
if you choose the revaluation model, IAS system has given you how to treat the revaluation difference. You don't have an option
okay,
there in the
okay. But what of if it is a cost model?
cost model to IAS system has given you how to treat the cost model. And the cost model, there's nothing like revaluation difference. The asset is
Okay,
carried at
yeah, that is what
cost minus
amortized
calculated.
cost. Cost minus there. Okay, okay,
Okay. So let's look at the small concept of IAS system. Then we can be able to understand what I've explained well. Okay. I'm saying that in the IAS system, property, plant, and equipment. If you look at subsequent measurement, subsequent measurement, they have option to treat the cost model or maximum. Like I said, even though today will be the last day for the preschool, what I'm trying to say is that we want to understand the concept well. Even if it's one question that we can solve, we don't have a problem. We still have to create an additional time, either for during the dorm meetings, like each day or something. Then we try and go through the questions. I do not. We've come far. I get it. So I do not want to rush at this particular. Let's still move slowly and then take our enjoyment. I know some people are lying on their bed and then be doing certain things at the same time. No problem with that. Let's proceed. So under the cost model, the asset is carried. The PP is 1. Depreciated annually. 2. At the end of each year, the PP is carried at cost minus accumulated or depreciation. This is the cost model. But under the revaluation model, that's what we are interested in. Valuation is done to reflect asset values, to reflect, so, to reflect market values of assets. That's the meaning of revaluation. A building that was put up 15 years ago at, let's say, 10 Ghana cedis. If without revaluation, the building will still be in the books at a cost of 10 Ghana cedis. And, it will not make sense. Not it. The financial statement will not be fairly well presented. Can you imagine a 3-story building, 1, and it's 10 cedis? Can you imagine? In the books, it will be in the books for 10 cedis. Is it that it will not make the financial report useful? Is that not it? So the essence of revaluation is to make sure that the values of the asset reflect their market values. It helps us to reflect market values in the value of the asset. Getting it? We represent the asset in market values so that we appreciate the value of the asset. Do you understand the argument? You people are not undergraduate students, too. You are professional students. So don't accept this is it and that is all. Sometimes you must understand the concept, the brain behind. Why this? You have heard of revaluation. Have you sat down to ask yourself, see the essence of revaluation? Why are they even worrying us with revaluation? Why is it even important? Revaluation is so important because you can't recognize the value of a building at 10 cents because it was built 10 years ago at 10 cents. Exactly.
Yes, please.
Exactly. Okay. Now,
Yes, please.
is there a question?
So what I want to ask is that, so in determining which policy to take, you must take into consideration what will account for some certain item that will depreciate over the useful life, and those that you think will also appreciate, so that when you are determining the kind of policy that you are taking, then you consider those things. Is that not it?
But see, usually when it comes to the policy, it's very subjective. The standard does not guide you as to at what point do you choose cost model or revaluation. It's very subjective. But ideally, um, Entities adopt revaluation for assets that they intend to hold for a very longer period, so that the
Okay.
revaluation is done periodically. For example,
Okay.
if they have an asset that will last for 5 years, they may not usually adopt the revaluation model. Did you get it?
Oh, okay.
And if you have something
Okay.
like land and building and those things that takes a longer period, then they'll go in for what? The revaluation model. Did you get it? But it's still subjective.
Okay.
Some motor vehicle will last for a long. You know that, especially in Africa here, you can buy a car for 100,000, use it for 5 years, and still sell it for 100,000. Two of us.
It's true.
Yes. So it's very subjective. The standard does not provide guidance as to when to use the cost model, when to use the reverse model. That's why I said it's a matter of policy. You have to make
Okay.
that policy or choose among these two policies and then be consistent with it. That's all. Today, you can't say that you are using cost model on, let's say, motor vehicle, and then the next time you say revaluation, the next time cost model. No. Oh, the only thing that standards is consistency. Once you choose a particular policy, you should be consistent with the policy. Exactly. Unlike
Okay.
if you go to IAS 23, in IAS 23, we have the benchmark treatment for borrowing costs and then capitalization, which is the allowed utility fee. There's a difference between IAS 23 and IFSAS. Under IAS 23, once the capitalization criteria is met, under the revised IAS 23, once the capitalization criteria is met, it is compulsory for you to capitalize borrowing. That is, you use the allowed utility fee. Those interests outside the capitalization criteria, that's what you expense. Or when it comes to IFSAS 5 in the public sector, that one is a matter of policy. IFSAS 5, the government would have to choose, or the organization would have to choose whether to go in for the benchmark treatment or the allowed alternative. So you can go for benchmark where you treat all interest as expense, and that's all. You can go for allowed alternative where the interest that's related to the construction of a qualifying asset is capitalized toward the asset. So, for example, in the case of Ghana here, and a public sector entity cannot stand up and choose among the policy. When it comes to financial statement in accordance with IFSAS, all those policies are, are chosen by the controller and accountant general. Once controller says that this is the way we are going, all covered entities must also comply. They will just provide you with the accounting and procedures manual. And even if you want to design yours, it must be in compliance with what they are giving you. You understand? So these are some of the issues. Okay. Now, revaluation model. Number one issue you should know about revaluation model is that revaluation is done periodically. Number one, revaluation is done what? Periodically.
Periodically.
It's done periodically. With that, you can choose to do
Every
revaluation every year. You can choose to do revaluation every 2 years. It can be every 3 years, every 5 years. You must be consistent with it. If you say every 5 years, then it should be every 5 years. You can't do revaluation 5 years, then 2 years, then 3 years. No, you be consistent with the period. This one, the standard provide guidance as to the choice of the period. The standard says that the period to choose will depend on the volatility of what? The market price of the asset. There are certain assets that the prices are volatile. That is, the prices they change often or frequently. There are others too that it takes too long for the price to change. And practically, location is also a factor for the market price of the asset. For example, if you look at the rate at which a land in Accra, you have a land in Accra, the rate at which the price will change is different from if you have a land at Abodunko in Cape Coast or my village, Akunuma in Cape Coast. Did you get it? Did you get me? But
Yes,
Accra,
please.
they can go and ask for the price of a land. Let's say they will say 100,000. In the next 1-2 years, the same land will go for 500,000. In fact, it can even be more if government begin to construct or make the road network. Hey, and they will theatre. So location, for instance, can play a role in the volatility of what? The prices. So revaluation is done periodically. You must be consistent with the period. That is, be consistent with the period. And the period depends on the volatility of the market. I want to use a synonym for volatility. What synonym can we use? I'm thinking maybe it's a big word, but I can't come to it. The period depends on the volatility
Fluctuations.
on the market shares and volatility can have on the fluctuation.
How
Period
fast
depends on the
something
volatility
changes.
of
Fluctuations.
the market price. Understand? I want to ask another market price. Just understand. Point number 2 is that we charge depreciation. Depreciation is charged. Depreciation after revaluation is charged on the revalued amount. Depreciation
Hello, sir. Are you there?
after revaluation, yeah, I'm here. I was trying to charge my money. Depreciation after revaluation is charged on the revalued amount. All this is I'm doing it because you would have to factor it in determining the revaluation gain or loss before you can calculate the deferred tax on revaluation. So I beg you, it's part of what you are supposed to know. Let's get the concept right. So in this case, the depreciation will be equal to the revalued amount all over the estimated remaining useful life. That is it. If it's not up to a full year, you multiply by the number of months. Unless the question says that full year depreciation is charged in the year of purchase and not in the year of what? Disposal. Did you get it? And that why you have to multiply by the number of months. These are just depreciation. Number 3 is what we need so much. That's the revaluation difference. revaluation differences. The question is, how do we compute and how do we treat? We need to deal with how to calculate and then how to treat. So let's go and concentrate on revaluation first. Are you following? Especially those who are doing financial reporting. I believe it's because of it they are doing these things. Those in level 3, they are aware of these things. They only revise. Level 3, no be so. Or exemption 4, no. The value is not the same. Exemption 4 ni na teacher. Oh, exemption 4 no more.
Yes, sir.
Say you continue.
And they teach all the exemption. Those who should buy exemption. Oh, as let me see, I know, yeah. So revaluation difference. Let's look at the computation. Then we'll look at the treatment. Okay. The computation. You will pick the revalued amount as given in the question. Then we compare with the carrying amount of the asset at the date of revaluation. Carrying amount. The revaluation date. The carrying amount at the revaluation. Which you know, you will go and pick the cost, then you deduct the accumulated depreciation. If it was previously revalued, then you pick the previous revaluation amount, then accumulated subsequent depreciation. Nicely like this. That if the revalued amount is more than the current amount, you have a gain. If it's less than the current amount, then you have a loss. So we have revaluation gain or loss. Note well that in the statement of financial position, after revaluation, the asset is carried at the revalued amount minus subsequent accumulated what? Depreciation. The moment there's revaluation in the financial position, you have to carry the asset at the revalued amount minus the depreciation that you charge after revaluation. This one is depreciation after the revaluation. And we now look at the treatment. And we now deal with the treatment.
Yes, please. Uncle.
we now know how to compute the revaluation difference. Now, how should they be treated? Number one, there are rules, simple rules. Rule number one, all revaluation differences are treated in the revaluation reserve and shown under other comprehensive income. That is rule number one. Now, the issue has to do with this revaluation reserve. All the problem we have under the treatment is with this revaluation. To understand the rules well. Rule number two is that the revaluation reserve cannot be negative. Revaluation reserve cannot be negative. Cannot be cannot be negative. Revaluation reserve cannot be. Because the revaluation reserve cannot be negative. If there is a revaluation loss, the loss that will make the revaluation reserve to be negative is taken to profit or loss account. Any loss that will make a revaluation reserve
Negative. Might be different too.
will be negative. Is treated in profit or loss. So assuming the revaluation reserve is 20 and the revaluation loss is 25. 20 will go through the revaluation reserve and it will be shown under other comprehensive income. And then the 5 that will make the reserve to be negative, you take it to profit or loss account. Exactly.
Yes, sir.
Sir, yes, sir.
Okay. Now, you can see that the first statement was that all revaluation differences are treated in the revaluation reserve and shown under OCI. But point 3 is contradicting it, is contrary to it, on condition that the revaluation reserve cannot be negative. So taking it to P&L is not the final resting place. So the standard says that subsequently, if you have a revaluation gain, then you have to go to the P&L to reverse that previous loss treated in the profit or loss account previously. Did you get it? So point number 4 says that subsequent revaluation. Any subsequent revaluation gain would first reverse the previous revaluation loss in the profit or loss before any remaining revaluation gain. Before any remaining revaluation gain is written in the revaluation reserve and shown here. So you should note that anytime an amount is treated in the revaluation reserve account, quickly it goes to an area called other comprehensive income in the income statement. Is that clear?
Statements.
Without this understanding, there's no way one would understand the deferred tax and what? Revaluation. Deferred tax and revaluation. A minute.
Hello.
Yeah, I'm here. Is a minute.
Hello, sir.
Yes.
No noise. That's all.
Any question?
Okay, sir. So what you're saying is that when you have a revaluation loss, for example, 20 cedis, and the following, maybe the following revaluation, you had a gain of 30 cedis. How will you treat it and then send the 10 cedis to the
Mean that
the
the
reserve?
first valuation you got the loss of 20
Yes.
because there's nothing in the revaluation reserve to offset the 20. When you take the 20 to the reserve account, it will make it to be negative because the reserve account has zero balance as we speak. So the 20 will be taken to profit or loss account. Then the subsequent year that you got the 30, you take 20 to the P&L account as a gain, as a reversal of the previous loss. Then the 10 is what you take to the revaluation reserve account. Now remember, the amount that is treated in the revaluation reserve account must always be shown under other comprehensive income. Exactly.
Yeah.
Radio. Ana somni. Mo wana somni. Oh man, yes, sir. I see, I don't have. Since I don't have. Just my idea by what? Into. I'm saying, till radio or pa, radio or pa. To tell me how much will go to the revaluation reserve, how much will go to OCI, how much will go to profit or loss. Siabuta Dempsey Nyajizi Nyami Bebe
Say until when?
Ojija Nyami Bebe Radio in business until when? Radio Radio Ewombre Mobia it is a ombre sunya to wash na only amponya said with the immediate staff.
Those who wait upon the Lord renew their strength.
Giving up should never be an option. Unless you don't want to do accounting work again. If you give up at 8:20, at 8:50, you still come back. They need to chatter. So do it now. Do it now. Maybe Mr. Osman, one of these days, how to allow you, the elderly people, to encourage the younger people. The younger people who want to give up. Just let them know that so long as they are not running away from accounting, even if they grow, they will now see the need to come and chatter.
Thank you, Sir Robert.
Going. Just see the need. At that time, now, wow, small pieces I ever bring. Sir
Robert, good morning.
Good morning.
Myself, I'm qualified, but I'm still learning.
You are
from you. I'm qualified already, long time, but I still learn from your IFRS pills.
okay. So you are a chartered accountant and you intentionally decided to join us. No issue.
Yes, please.
So colleagues, you have your friend, the senior. They are saying that their time will not come. I'm start saying.
Or the year here now.
No, don't give up. No.
Some of them are giving up.
You don't have to give up. Have faith. You will surely go to one day.
Did you fill any paper? Did you fill any paper?
Yes, I did. I wrote CL for 4 times.
Okay. Okay. I see those feelings that are born. So no man. Yeah, we share an answer. I say. Aha. So radio, like I said, even if you have written for 19 years and you want to give up, I will give you someone who wrote for 20 years, 21 years. And I will give I have all those people. They never give up. And for qualifying, God gave them a glorious opportunity. I told you of a man in Legon. He was working with Legon, then he left to work with an NGO. He came for class. I looked at him and I said, I know you somewhere. Not knowing he attended Poly. And way back in Poly, he was staying at Adipa Gardens, which was closer to where I was staying. And we used to fetch water for him. That time I was in class, like I was in primary school, class 4, thereabouts. We used to fetch water because there were water crisis. When I saw him, I remember somebody that I knew. So we clicked. He said, Charlie, it's also my trust how we see Poly. I'm talking of the 90s. So trust how. When I met him, he had written the exam for about close to 15 years. And he had to spend another 4 or 5 years with us. Many year one go the canker. And I'm not qualified. As I speak to you, the man is working with you. It's a multinational company. He qualified. And when you qualified, they got a slot to the organization that they want a finance person there, and they want it from the organization. And they want somebody who has recently qualified, but they want somebody who is, versatile with higher contribution. So they want somebody who is really qualified. And the organization, the SAP region, he was the only person who qualified within that period that the recently qualified. He was the only one. He had no competition. He's working with you. It's with you. So see, if they had qualified long ago, that opportunity wouldn't have. So sometimes I read a book, the title is Why the People of This World Do Not Understand God. They try and inquire where we are. So that's why I said today, everybody should go to church. Whether you failed or you pass, go and tell God that God, thank you. I know you are planning something good for me. So even in your failure, you never know what God is planning. Now is there taking dollars or pounds? But yeah, that's this cities. Any so my God. Can you imagine? As a mukudua, Ayana Makana. So for Yakut Musia was so. Yamu be brass. Matapana without friend. And that's yen to us. So let us assume that in 20
Your statement.
Yɛbɛhyia wo paa.
it happens. And so don't give up. My mate is called Patrick. I said, MBA. After MBA, say, Robert, I want to write the CA. He was giving up when they introduced advanced effort. The child has to even come and qualify before him. No, so we are not qualified. He told me he was leaving he had gotten a bigger offer before he was leaving. He got, what bank, they give their contract for 3 years. And after 3 years, he got one bank contract. 3 years, then he left. Then I had gotten another pickup. So what I mean that when he qualified, that opportunity came. And to that point in time, he was the only person available. So God, he doesn't want you to even get a contest. You understand? So he's just preparing you. So yes, just trust the process. Trust the process. Everything will be fine. Never give up on your CA career. if Mr. Mpini to give up on the CA career after writing level 3 for almost 10 years, would he have been an EY partner? Would he have been a partner of Ernst & Young, one of the biggest big four departments in the world? No. So don't give up. Don't give up.
We will be fine.
Right. So let's say 2015, you have a revaluation gain of, you have a revaluation gain of 6,000. 2016, you have a revaluation loss of 4,000. 2017, you have a revaluation loss of 3,700. 2018, you have a revaluation gain of 4,300. 2019, you have a revaluation loss of 1,200. This one, you have a revaluation gain of 6,500. You have a revaluation loss of 9,900. You have a revaluation gain of 8,100. You have a revaluation loss of 2,100. You have a revaluation loss. $9,100. Let me see. 9,000. Now let's see. 2015, there's a revaluation gain of 6,000. How will it go? How will
Reserve
it treat
and
the 6,000?
OCI.
It will go to revaluation reserve. That is, it will be credited to revaluation reserve. And then once
And
it
the
hits the
OCI.
revaluation reserve, it will be shown on the OCI. That's what will come to P&L, right?
Yes.
Then in 2016, there was a revaluation loss of about 6 o'clock. I feel a bit more sorry on my journey. Now you are 56. You receive cumulus class. 2016, you had a revaluation loss of 4,000. How will you treat it?
4,000.
So you
You
lose
debit the
4,000
revaluation
to
reserve. 4,000.
debit.
So you
Yeah.
can see that the revaluation reserve can consume all the loss. Is that not it?
Yes.
Yes.
So it will be 6,000 minus 4,000. So the
4,000.
balance will be what? 2,000.
1,000.
What will go to OCI will be what? Be 4,000.
4,000.
It's a loss. Revaluation P&L will be that, right?
Yes.
In 2017, there's a loss of 3,000. The FR student, do you understand what we are doing? So the one I'm
We
teaching
are
this, so
following.
don't do it for the first time.
We are following.
You are following, okay. So revaluation loss 3,700. You have revaluation reserve account. The balance is 2,000. So how much will go to the reserve account?
2,000.
2,000
2,000.
2,000.
minus 2,000.
That 2,000 that's for taking to reserve account, the balance will be 0. You take it to OCI as a loss, right? Of 2,000. The remaining loss of 1,007, which could not be consumed
To P&M.
by the revaluation reserve, will go to where?
P&L.
P&M.
P&L as a loss. Jerry, are you back? Are you in now? Jerry Asma. I'm a poor man for but tell me the way. At this time, I'm allowing the order. Hey. I took a loan to write ICO. Into my attitude was different. I started with a loan, slate loan. I didn't count. Revaluation gain 4,300. How will you treat it? Revaluation reserve.
4,300.
4,300 minus 1,000.
So okay, how much will go to? So tell me, how much will go to PNL?
1,700.
1,700.
1,700 as a gain to
Yes.
Yes.
reverse the previous loss. Then the remaining gain of 2,000 what? 600
600.
2,600.
be taken to revaluation reserve and shown under what? OCI, right?
Yeah. Yes.
In 2019, there's a loss of 1,002. The whole 1,002 can be consumed by the revaluation reserve, right?
2,600.
So that would be 2,600 minus what?
1,200.
1,200. So this will be a loss of 1,200. Nothing will hit the P&L. Is that correct? Is that correct?
Yes, please.
There is a gain of 6,500. So that will make this 1,000. So that will be 1,004 plus what?
6,500.
500. The OCI will be what? 6,500. This will be dash. That will give us 7,900. There's a huge loss of 9,900. So this will be 7,900 minus 7,900. That will make the balance to be 0. So 7,900 loss we recorded an OCI. Then P&L will take the difference of 2,000 loss.
2,000.
Then 2022 there was a revaluation gain 8,100. So the first 2,000 go to the P&L to reverse the previous loss. The remaining 6,100 taken to the reserve account and shown on the OCI. Is that correct?
Yes.
The FR spend, are you with me? Those doing it for the first time, are you with me? This concept is an IAS system. The lowest share once and for all. You understand?
Yes, sir.
Okay. I didn't count. Like I said, we would have to arrange some additional time to clear the questions there. It's important we take our time and get the concept. Okay. So revaluation loss 2,100. How do you do that?
You take it from the
reserve.
Reserve account, they will show it on the OCI. Nothing will affect P&L. Then there's another huge loss of 9,200. How will you do?
4,000.
4,000 from the reserve.
Okay. So that 4,000 will be shown here and the OCI as a loss. Then the P&L will take how much?
5,000.
5,200.
So today, nobody, none of you can stand anywhere and say that he does not know how to treat revaluation gain or loss. Is that not it? So let's go back to deferred tax. He's saying that any deferred tax caused by revaluation is treated in the same way and manner revaluation difference is treated. So if the revaluation difference is shown in the OCI, then the deferred tax called by revaluation also be shown at the OCI. The trick is this: a revaluation gain will give rise to a deferred tax expense or loss. A revaluation loss will give rise to a deferred tax credit. Did you get it? Let me explain.
Tell me again.
If there's a revaluation gain, what it will do is that it will make the tax base of the asset to be lower. You know, if there's a revaluation gain, it means that the revaluation is upwards. The value of the asset has increased. Is that not it?
Yeah.
Okay.
So if the value of the asset increases, that's the kind of amount. If it increases, intuitively, or if you want to compare, we expect the tax base figure to reduce to be less than the current amount by the same value. Is that not?
Okay.
So if it makes the tax base of the asset to be low, then it means that salary profit is lower, and you pay lesser taxes now. In future, you pay more. So revaluation gain give rise to deferred tax liability, which is a deferred tax expense. Is that not it?
Yeah.
Revaluation loss give rise to deferred tax credit, but that one will reduce the current amount of assets, which will make the tax base to be higher. So you pay more tax now,
Okay.
you pay less in the future. So you get the trick.
Mm-hmm.
Okay, now let me write that one.
Sir
Let me
Robert,
write it.
please, can
The
you
keynote.
explain again?
That's what I'm writing on the keynote address. This is the keynote address. The keynote address is that revaluation gain will give rise to deferred tax expense or loss. In fact, what I'm talking about is funds. Revaluation loss will give rise to deferred tax credit. Deferred tax credit or gain. Always. So that once there's a revaluation gain, in your mind, it should be clear in your mind that the effect is that you are going to recognize the deferred tax or expense in respect of that revaluation. If there's a revaluation loss, it should be clear in your mind that you are going to do what? You are going to recognize the deferred tax credit or gain
Okay.
in respect of that. So assuming the loss is taken to P&L, then the deferred tax caused by revaluation will also be taken to P&L. If the loss is shown under OCI and taken to revaluation reserve, then the deferred tax credit will also be shown under OCI as a gain and be taken to revaluation reserve on the credit side. So the revaluation loss will be at the debit side and the deferred tax credit will be at the credit side. Did you get it?
Okay.
If there's a revaluation gain that is shown under OCI, you see that in the reserve account, it will have a credit balance. What is a gain? But the deferred tax, which is a loss, will be at the debit side of the revaluation reserve. All we want to see is that in the revaluation difference and the deferred tax caused by revaluation should be treated in the same account. They should be in the same area. Did you get it?
Okay.
Did you get it? Yes. If you fail to do what we are saying, you will cause what we call in accounting mismatch. There will be an accounting mismatch. You cannot, for a particular transaction, you are recognizing the gains and the OCI. And when it comes to the loss that the transaction is causing, you take that one to P&L. We say you have really enlarged or created an accounting what mismatch. You remember we said some and the borrowing cost. When we said that in the period in which you capitalize borrowing costs, if there's an investment income, what do? You have to use it to reduce the borrowing cost to capitalize. If the period within which the investment income is earned, you don't capitalize borrowing costs. If the borrowing cost within that period is treated in P&L, then the investment income earned also be taken to P&L. If you fail to do that, you create an accounting or mismatch. Did you get it?
Okay.
Yes, please.
I think.
Also,
So technically, I'm done with deferred tax and revaluation, and technically, I'm done with income transition. Now it's left with your ability to apply the concept to different situations. The Muslims have a song. The Ahmadiyya Muslims, they have a song that ends with a honor someone or na somewhat, like that is where you are. Honor someone. So let's go and at least fix a question, okay? And then after the class, we will agree on the additional time we will create to cover, if not all the questions, but at least if you solve one, you solve three, solve 10. So 10, it may create additional time for yes, system. It's about you seeing different scenarios. Did you get it? The ability to see different scenarios under the same standard. It helps you. So no matter where the question will come from, you just do it. Okay, let's go and do before we take the test. Photograph, I believe you are here. Or our photographer is sleeping.
Yeah, please, I'm here.
He's sleeping.
So I'm here. I'm here.
Yeah, okay. I
Yes.
think
Please, the questions, have you posted them on the page?
it's on the link to the link that has the videos. The questions are there.
Okay.
You are on which page, please? Which page are you? And you are on which WhatsApp page?
Hello, sir.
It's that.
Those of us on the IFRS pills, we've been there for, I don't know since when. And we are not on the page to get access to the question.
I've been sending that page, the preschool page. I send the link on iFi school many times. So I thought perhaps you guys have joined.
No, we
So
don't
let
have
me.
it. We only have the link to join class.
Join class, okay.
Yeah.
So I'm going there now. Let me share with you. I'm sharing the link to the school, okay, the preschool that you join to have access.
Okay.
Thanks a minute. Let me start. I don't know what it is.
Sir Robert.
Have people to join.
Sir Robert.
When they just go up, you see them.
Sir Robert, this is Mr. Adam. Can you put me on the preschool page?
This who?
Mr. Dan, can you put me on the preschool page?
That's WhatsApp me. I don't have.
Okay.
WhatsApp me. I'll send you the link.
Okay.
I met yes. Yes. About the enough. Look at this new question. It is short, but it reflects exactly what. How would I have seen your message? Me, Masra. Now the matters. So, those who want the IFI book, it's left with I think 8 or so. We are printing some, it's left with 8. So, 2 delivery Monday, Tuesday. So, try and then place your time. IFI book is there. Corporate reporting, financial reporting. Public sector book will come by the end of this week, together with the diaries. We have man accounting. So those who want the books, you try and WhatsApp me. All right, let's see question 10.
Robert, did you say IPSA book?
No, I said that PEC, public sector accounting.
PSA, yes. Okay. And man accounting,
So we have for man accounting, we have F, we have corporate, we have F, we have advanced.
Okay, sir.
So this week, everything that you want to get. All right, let's see question 10. Can we see question 10?
Yes.
Yeah. So somebody should read question 10 for us. Those who have printed it, be highlighting the ones that you saw so that you don't have to repeat solving it. All right. Let's go.
Prepare relevant extract for the year ended 30th June 2017. The following relate to Moreland Group for the year ended 30th June 2017. The group has a policy of revaluing its property on an annual basis, and Lyndhurst has correctly accounted for a revaluation surplus on its property in its financial statements. Moreland owns property with the following details. Carrying amount 30th June 2016 and then 30th June 2017. Fair value 30th June 2016 and then 2017. Tax base. Moreland has not yet provided for the revaluation gains and associated deferred tax for the year ended 30th June 2017. Moreland has a tax rate of 30%, which is not expected to change in the foreseeable future. Revaluation gains are assumed to arise at the end of the year. Required.
Okay, so we know that. So they use the word property. And once they use the word property, it means they are referring to land and building. True or false? True. So long as we were not given the depreciable portion of the property, you assume that the whole property is land. Is that clear? Is that clear? Is that clear?
Yes, sir.
Yes, we are here. Mhm.
Meaning that when we say property, it's about land and building. When we say PP, property, plant and equipment. Land and building is what represents property. All other assets falls under plant and equipment. And I'm saying that the property, it's either land or building or both. So if they don't talk of the depreciable amount of the revalued amount, it means that they are talking of land. So it means that depreciation is not important in this case. So it means that they are referring to land, which is freehold land. So any freehold land, don't depreciate. I get it. We're taught that we don't depreciate because it appreciates in value. We don't depreciate because the land will be with you forever. So the useful life cannot be determined. That's why we don't depreciate freehold land. Essence, and drop out. Like seriously. Ghanaian essence. And I answer why.
And then over what I
Now,
say.
Madam Kano, it's not true that when you are preparing an account, the current assets should be arranged in order of liquidity. It's never true anyway. You can start with cash and end with inventory, whatever. It's never true. It's only in the
Okay.
case of bank. It's only in the case of bank that banks do not classify current and non-current because of the categories of loans and other things that they have. So banks are allowed to put all their assets together, which in that case, it requires that they arrange their assets in order of liquidity. Maybe my comment says a could be some accounting teacher is there. That's I don't know. This is how I information. Yeah, from them. So let's go back to the question. So with not late, you have been given this question. Like, come to your mind. How would you start such a question? What would be the first thing you will look for in such a question? Right. What would be the first thing that will come to mind? What do you look for in such a question? The first thing that you look for. You can see clearly that the asset was fair value at the end of 30th in 2016. So you can see the current amount and the fair values are the same, telling you that the fair valuation was done at the end of the year. Is that not it? That's why it's the
Yes,
same
sir.
there. Even if
Okay.
it was there was a building, it would have been the same since it was at the end of what the year. It's only in subsequent period that we charge depreciation. But in this case, even though we are not told that it's land, it's clear that it's land because useful life were not okay. What is the first thing that comes to mind? If you ask such a question, what's the first thing you will calculate? Upon the issue, yes. Last one.
Yeah. So I can see that as at the end of 30th June 2016, there was either a tax, deferred tax, which has not been taken into account. So you have to establish that one. That will enable you to when you come to the 2017, it will become a what? A balance brought forward. So you compare what will be at the end of 2017 to see whether it has reduced or it has what? It has increased. So you charge the tax base,
Okay.
the 300 million, with the tax with the tax of 30%. Okay. You
Okay, so Shadio, when I'm seeing something else in the question, me myself today is the first time reading the question. I just compile the question, I've not even read. So I'm seeing something else in the question that shows that perhaps maybe there's a building as well. But maybe they've accounted for the depreciation issue. Did you get it? Did you get it? If you read the question well, it says that the group has a policy of revaluing its property on an annual basis and has correctly accounted for a revaluation surplus on its property in its financial statement. Molan owns property with the following details. Is there? Molan has not yet provided for the revaluation gains and associated deferred tax for the year ended 30th to 2017. No revaluation gain or loss has been treated, and the deferred tax has not been treated. Okay. Now, Molan tax rate is 30%, which is not expected to change. Revaluation gains are due to arise at the end of each year. No, now look at this. Without applying revaluation gain or loss, okay, what is the current amount at the end of 2016?
42 million. 422 million.
What is the current amount at the end of 2017?
386 million.
386.
You can see that between the 422 and 386, we have not treated any revaluation gain or loss. Is that not it?
Okay.
So what account for the difference? We should tell you that they have already charged the depreciation. Is that not it?
Yes. Yes, please.
Which means that perhaps there's a building. There's a building aspect. But they have accounted for everything. Depreciation and everything. The only thing that they have not accounted for is the revaluation gain or loss and the deferred tax. So the first thing you should calculate in this question is your revaluation gain or loss. That's what I wanted you to tell me. First thing is the revaluation gain or loss. The second thing you should know is the deferred tax called by what? Called by revaluation. Did you get it?
Okay.
The deferred tax, the deferred tax called by revaluation. Then the next thing you look for is the deferred tax issues. How much deferred tax liability should be recognized at the end of the year, and how much will be taken to profit or loss. It's very important that you get to know that. Do you get it?
Okay.
Did you get it? Now let's see. Let's see. Radio. Yeah, comment kakran. There's a question. I love the question. This question what?
And
Question what?
question 10.
question
10.
10.
So the workings. Number one. Looking for
Evaluation.
revaluation in or loss. To the revaluation, the revalued amount. We are looking at assets. 30th June 21, 2017. What is the revalued amount?
450.
We have to go back to the question and check. So the revalued amount is the fair value, 450. You get it? Did you get it?
Yes.
Now, what is the current amount? That's at the end of 30th June 2017. That is a 422 minus any which they have done the depreciation for us. So they said the current amount at the end of 2017 is what? 386.
86.
86. So what is the revaluation gain, right?
Yes.
Yes, please.
What's the revaluation gain?
64.
64.
Now workings number 2. You now look for the deferred tax called by us revaluation.
Evaluation.
We then what your glory is on our way. So deferred tax called by revaluation. So that is 64 times what's the current tax rate?
30%. 30%.
30%.
That will give you how much?
19.2.
19.2.
19.2.
Yes, please.
So this is the deferred tax called by what? Revaluation. Now we want to go into the deferred tax for issues. Okay.
Okay.
Under the deferred tax issue, you need some items. You need the deferred tax balance brought forward. Is that not it? You need the deferred tax balance carried down, right? So that you can be able to determine the amount that should go to P&L after deducting the deferred tax caused by revaluation. You get it?
Okay.
Okay.
Now let's see. Let's see what God has for us. Now let's go and look for the deferred tax liability at the end of the previous year. In other words, the deferred tax liability got forward.
16.
Deferred tax liability got forward.
Okay.
Which is 30th June 2015. That's the end of the previous year. At the end of the previous year, what was the fair value at the end of the previous year? Or the kind of amount then? I mean the fair value.
422. 422.
422. What was the tax base?
300.
300.
Yes.
So you can see the tax base is lower. So the total profit will be lower and they'll be paying lesser taxes now, in future they pay more. That's why I'm saying that to give rise to the tax liability. So the difference is a taxable temporary difference, two of us.
Yes.
The 122 is a taxable. Honorable Prosper, RDC, please ask the question.
Yeah, sir, please, good morning. Please, the deferred tax liability brought forward, the year should be 2016, not 2015.
Not 16 years.
Okay, so the current year is 17. I mean, the current year is 2017, eh?
Yes.
Okay, thank you. So taxable temporary difference, 122. Now let's look at deferred tax. So we have the deferred tax liability brought forward, which is
30%
30%
times 122.
of 122.
36.6.
36.6. So that's how the deferred tax balance of what that you want. Is that clear?
Yes,
Is
please.
that clear? Can we look for the deferred tax balance carried down? Can we look for that?
64 times 30.
Immediately. Deferred tax liability carried down. That is
Carried down.
30th June 2017.
That is what we have here.
So at the end of the year, the fair value that will be the value that will be the financial position is the fair value at the end of the year. So we pick the fair value at the end of the year. How much? How much?
It's 450.
450.
450.
Okay. Now we have to compare with the tax base at the end of the year. What's the tax base?
220.
220.
Hallelujah. Hallelujah. Yes. My baby. Hallelujah. Hallelujah. Garment.
230.
What's the difference?
230.
230.
30. Radiation. Radiation.
69.
So deferred tax. Carry down. But so no sorry, no good yes. Yes. Dance the failure of just dance it off. Receive a victory in advance. Receive victory in advance.
Yes.
I was 646. So now I finish for bedroom.
69.
That's how we want.
69.
69. Now let's go into our own scenario. We have learned that if you have a deferred, this is the formula. The formula is balance brought forward plus X is equal to balance carried down. Is that not? Is that not it?
Yes, it is.
Yes, please.
Now let's look at the movement. The movement in deferred tax. So the balance brought forward is how much? The deferred
36
tax
points.
liability brought forward. Deferred tax liability brought forward.
36.6.
36.4.
6.
What is the deferred tax liability carried down?
69.
So mathematically, the mathematical thing that we did, if we should put X here plus X, This is negative, this is negative. What will be x? You did get it. This negative, this is negative. So what will be x? This movement should go to the income statement. Then what will be next? What will be there? So if you don't know, just write negative 36.6 plus x is equal to negative 69.
Okay.
What will be the answer? X will be equal to negative 69 plus 3.6, 36.6. What will be the answer?
105. Sorry.
Negative what? And then the 1.
32.4.
9 minus
33.6.
36.
33.1.
60.
32.4.
Ah, 32.
32.4.
32.4.
32.4.
So if there was no defect as caused by revaluation, this 32.4 would have been sent to P&L as a deferred tax expense, right? Right? Is that not it?
Okay. Uh-huh.
But we have learned that the deferred tax caused by revaluation is 19.2. It means that 19.2 of this expense was caused by what? By revaluation. And because the revaluation gain taken to OCI, the deferred tax caused by revaluation also be taken to OCI. So other comprehensive income take 19.2. And the difference of 18.2 will go to where? It will go to P&L.
P&L.
Did you get it? So that is that.
Okay.
In your presentation, it will be like this. If you are presenting in the financial statement, it will be like this. The time we should show how to present a financial statement. Right? So profit or loss, deferred. So they can give such a short question for 7 marks. You won't understand why it is 7. So a question here with. So deferred tax expense, how much? 18.1. 18.2 an expense. Then under OCI, other comprehensive income, you write revaluation gain. How much was the revaluation gain? He said if not treated it. 64, right? And you write deferred tax expense or deferred tax loss. How much?
19.2.
19.2. Once you recognize revaluation gain, there's also an expense following it. Did you get it? Did you get it?
Okay.
So
Okay.
in a statement of financial position, it will be like this. So I can upload the video for you 5 minutes so that lot of qualification that go through. But anybody who does not go through this, when we are solving the other question, the person can. So we have non-current assets. Now on the 3P, we pick the revalued amount of work. No problem with that, right? right? Then we come to
Yes, sir.
equity. On equity, we have revaluation reserve. We have a gain of 64, but that gain is causing a deferred tax of 19.1, which is a loss. So we deduct. How much are we getting? Then we go to non-current liability. So we treat the deferred tax at the end of the year. That's the deferred tax balance right now of how much? 69. 20. You get it? At this point, if you don't get it, you need to forget about it and go and study again. So revaluation reserve, that will give us how much? 44.8, right?
Yes.
So that is it. It's not anything. It's not anything. Anything. Cry. Put the one. What the one was said. Then not then. The moon that was. Emuna.
Please scroll your board to the other side.
Do what?
Scroll the board to the other side, to the presentation. Yeah. It's okay. That's fine. All right.
Wait, you can get the 30 and 13 point PNF straight away. If you choose to ignore the revaluation, you get the PNF straight away. Okay, so let's look at this. So the kind amount was how much? 386, right? The total base was 220, right? When you did that, you get 66, right? So the deferred tax liability carried down. When you multiply by 30%, what will you get?
We are getting 49.8.
9.8. That's the deferred tax liability carried down, if we don't factor the revaluation. So when you compare the 49.8 in the 36.6, it should give you the 13.2. When we have ignored revaluation, that will tell you the amount that you go to PNL. Did you get it? Did you get it? Did you get it? That's all. The PNL figure, what's 9.8 minus 36.6, which should give you 13.1. If you want to get the balance at the end of the year, you just add the defector caused by revaluation to the 49.8. When you add 19.2 to this, you get the 69. Is that not it? If you understand it, there may be so many ways of dealing with it. But the approach I've given you is just be able to follow the things systematically. I want you solve more questions and you get the understanding. You see that there may be so many ways of getting the same answer, getting the same answer. Clean the second one. You don't want any confusion, have you? Let me clean the second one. Go and take our question, our pictures. They are 64. It means that somebody had entered. If I shall join a woman, it was fire pay. What has a tawaba? Radio. Now, who would you anyone?
Sir Robert.
Yes.
Sir Robert. Good morning.
Yes. Yes. Good morning.
Please, how can we get the question? I don't have it.
You didn't join, right?
No.
What mean that you have been sleeping?
No,
Because
no.
this person,
I overheard
right.
somebody asked they were on the IFRS page and he said you reposted, but I didn't see it. That's why I'm asking.
I sent the link on the IFRS page that you should join the preschool. It was on the post page.
Yes, I'm on the intervention page and the pills page. I even went to the Telegram to see if I'll find it, but I didn't see it there.
Click the post page. Send a link there for you to join the preschool. When you join the preschool, you see the video link there. It contains all the lecture questions for the video that I've sent you.
Okay.
Contains the lecture questions, the videos.
Okay, thank you.
So please go and move.
Can move, okay? Let's take this one. Obi, as I said, thought from about Ellen, be support. So, my man,
So please go and move.
Shano Power.
Can I move?
Yes, please. Please go and move.
Let me see if I can use it. Wait for it to be sharp.
Okay.
Can I move?
Yes, please. Please go and move. Okay. Thank you.
Honorable Prosper, your hand is up again.
Yes, sir. Please, I want to ask. So, in every scenario that there is a revaluation gain, do you have to calculate the deferred tax expense that you deduct from it?
Yes.
Is that so? Or it's only for deferred tax, or
Yes.
if you can
Whenever
explain
there's a
that?
revaluation, there will be a deferred tax expense caused by revaluation. If there's a revaluation loss, there will be a deferred tax credit or gain caused by revaluation.
Okay.
It's always like that. That's why I wrote it as a keynote for this.
Okay. Thank you.
All right, friends. So let's see. We are starting the main class tomorrow. Please try and register and let's learn the topics together and on time. Let's see.
Say hello, sir.
When do we start? Please let me land. When do we start the dawn meeting to be able to finish up these questions? At least we have done 3, right? It's 13.
Yeah.
So at least it will get 10 crown Kenya. Yeah, so when should we start? So I will need like 7 days. So maybe I resolve one, maybe I hear one.
Roma was Numa Black.
And I hope prosper, I understand.
Yeah, yes, sir. Please, I want to ask. Your classes you are doing it in twofold. One for the main class and one for the you say those visiting. So which one are you talking about?
I'm starting the class on Monday. There's a timetable for that. So you have to check the timetable when you have a class.
Okay, thank you.
You understand? But I'm saying if you registered for self-appropriate reporting or special case study, then you'll be allowed to join the normal class as well. If you think you are okay with other topics and you're fine. But I mean the normal class is free for you. Did you get it? Did you get it?
Okay, thank you.
Sir Robert, please, the dawn class, can we do it 4 times a week?
So that okay, so let's do 3 days this week and then 4 days next week. So that we would have done 7 questions. Not 7 additional questions. Not.
Okay, sir. So which
Is
days?
that okay? But so this week, this week, let's do it. Maybe let's do it on Wednesday, Thursday, Friday. So that I'm thinking the Monday, Tuesday, you easy to go through what we've done to understand, so that you can follow the questions.
Okay, sir. So Wednesday, Thursday, Friday, dawn.
Yes.
4 to 6.
Yes.
Okay, sir.
No. What is 4 to 6? We are only meeting to solve one question, so it will only be 1 hour. So 4:30 to 5:30, people go to work.
Okay, sir.
Fine. Is that agreed by all of you? It's like only one person is talking to me. Let's all agree.
Yeah, it's okay.
Should it be 4 to 5? Should that time be 4 to 5?
5 is okay. No, 4:30 is okay.
The days, which days?
4:30 to 5:30 is okay.
Okay, so if that time 4:30 to 5:30 is okay, let's agree on the day. I'm saying that now we didn't have a problem if we should meet tomorrow, Tuesday, and Wednesday, and then next week we do 4 days like this. But I'm thinking I should give you 2 days to be able to watch the video to understand, so that you can follow questions. So I'm thinking for this week, we should do the door meetings on Wednesday, Thursday, and Friday. So that next week we can do Monday, Tuesday, Wednesday, Thursday, and we'll finish.
That's fine, sir.
Yeah. So let's clear this one, then we are clear in our mind that we don't have a problem with income tax. Did you get it?
Okay, sir.
Okay. So over to you. Let me write my number. If you want any of the books, WhatsApp me. If you have issue with the registration, you can WhatsApp me. So that's my number. If you have any issue, and then the pages still there. Maybe you are going through anything I will solve or something, you have a question. You can ask. I will use audio to come and explain to you. Okay?
Okay.
All right. So we encourage all of you to join. Don't give up. The fact that you have failed does not mean that's it. So kindly don't give up. Let's continue to pursue our CA career and everything. Now, Prosper, your hand is up again.
Yeah, yes, sir. Please, your book, the IFRS book and the corporate book, have you updated them or is the same one? Because I have the old ones. I've bought them.
It has been updated to the new syllabus. So the I5 now has additional, I think, 120 pages for. So there's sustainability in it. There's sustainability report.
Okay.
Hello, sir.
So that's the yes.
Sir, we just bought one just last day too. Do we need still to buy
Yeah,
another one? Just
last like
the July.
IFRS is updated.
The July one.
So it's updated. What I mean is that you don't have to buy another one.
Okay.
Like we updated when they brought the new syllabus. So
okay. Thank you.
So thank you so much. See you on Monday if you are doing a subject that we are supposed to do on Monday. Let me see Monday. Monday on the Onetouch timetable. On Onetouch timetable, level 1 has financial accounting. Level 2 or level 1, the level 1 that have level 2, they have financial reporting. And then level 3, they have advanced calculation. So that is all. So just follow the timetable and let's watching. So see you.